Welcome to the Economy Magazine. I'm Binyamin, Tjong-Alvares with the top economic reports from around the world. Coming up today, reconciliation, reunion, and conspiracy in Beijing as Pacific leaders attend APEC. And Afterlife business flourishes in Japan. First, the headlines. Asia-Pacific leaders on Tuesday endorsed a Beijing-backed concept for a vast free trade area in the region. Chinese President Xi Jinping called it a historic step, reflecting the confidence and commitment of APEC members to the FTAAP. The Chinese plan comes as the US-led TPP initiative, which excludes China and Russia, has so far failed to gain momentum. Russian President Vladimir Putin warned leaders at APEC against splitting up into separate alliances, competing among each other. But US officials stressed the two trade concepts were not contradictory. More on APEC following these headlines.
This is a concrete step we are making towards the direction of realizing the FTAAP, and it symbolizes the official launch of the process towards the FTAAP and demonstrates the confidence and commitment of APEC members in promoting regional economic integration.
European stocks dropped from a 5-week high as investors considered valuations and banks declined. The Stoxx Europe 600 index dropped 1.1% in early afternoon trade in London. Banks on the Stoxx 600 posted the biggest decline of the 19 industry groups on the index. Banks slipped after US, Swiss, and British regulators fined lenders to settle a probe into foreign exchange manipulation. 5 banks agreed to pay a total of about $3.3 billion to resolve allegations they manipulated the foreign exchange market. Long-running investigations by US, British, and Swiss regulators indicate the banks were engaged in activities designed to move the forex market to benefit their own trading positions. The US and British settlements were with HSBC Holdings, Royal Bank of Scotland, UBS, Citigroup, and JP Morgan Chase. Barclays, which was also in late-stage settlement talks, pulled out at the last minute, saying it had decided to seek a more general, coordinated settlement. Yahoo made a big push into video advertising by buying Brightroll, a programmatic video ads platform. The $640 million acquisition is Yahoo's first major acquisition since the sale of part of its stake in Chinese e-commerce group Alibaba. The company, which powers digital video ads for brands across websites, apps, and internet-connected TV, could be one of the largest growth opportunities for Yahoo. eMarketer expects the fast-growing U.S. digital video advertising market to grow 56% this year to $6 billion. This week, China hosted APEC leaders in Beijing for the first time since Paramount leader Xi Jinping took office. And though Beijing and Washington both seek to unite their Pacific neighbors in a trade pact of their own, President Obama highlighted the importance of the synergies that bind them. Here's i24 News reporter Dallin Watt with more.
Pomp, circumstance on the red carpet, traditional music and local dances, and a sumptuous banquet. For this APEC summit, all the stops were pulled out by the hosts from Beijing. The forum includes 21 leaders of the Asia-Pacific region, whose countries account for 57% of global GDP and 44% of international trade. They all came with the same goal of strengthening regional economic integration. First step, the adoption of a roadmap for free trade.
The future development of the Asia-Pacific is beneficial for every member. We've already reached important common understandings on areas such as interconnectivity and striving for innovation. We need to turn common understanding into action, plan a development blueprint for the next 5, 10, even 25 years, step by step, practically carry the plan out.
While Beijing and Tokyo are trying to resume dialogue, Washington called on China to liberalize its markets and the conversion of its currency so the central bank will have more reserves. The first step could reduce the cost of financing its business, while the second would end its financial dependence on the dollar. In addition, President Obama also announced a reciprocal visa extension agreement between the two countries.
Keep in mind, last year, 1.8 million Chinese visitors to the United States contributed $21 billion to our economy and supported more than 100,000 American jobs. This agreement could help us more than quadruple those numbers.
Still, the real dynamic duo of this forum is Chinese Premier Xi Jinping and Russian President Vladimir Putin. This is their 10th meeting in less than 2 years.
I believe that settlement in national currencies between partners such as Russia and China is a very promising area of work, which help find new opportunities in bilateral trade and significantly impact global finance and energy markets.
Bilateral relations are in good shape between China and Russia, which have signed several agreements, including a major energy deal, which some see as a snub to Western sanctions on Moscow relating to the crisis in Ukraine.
Israel has long been referred to as the startup nation and Silicon Valley, but how long can it continue to ride on those tributes? According to some participants at the annual General Assembly Conference of the Jewish Federations of North America, it's time for Israel to upgrade. Joining us now from New York City is Tal Keinan, CEO and co-founder of investment management firm Clarity Capital. Mr. Keinan.
Hi, thank you for having me.
Thanks for joining us. You spoke to leading members of the American Jewish community at the General Assembly about the Startup Nation Chapter 2. What do you mean by Chapter 2, and what was your message to these American leaders?
Well, first of all, the people I was talking to were some of the decision makers at the foundation endowment level. So there's over $80 billion today in Jewish Federation endowments across North America. And we are sponsors of an organization called the Investment Institute, which essentially tries to integrate best practices, best investment practices across those endowments. So if you think about it, if those $80 billion in endowment funds are underperforming as investment assets, let's say by 200 or 300 basis points, that can translate to $2.5 billion a year in what really should be looked at as lost funds that cannot go to causes like the causes that I spoke about at my talk yesterday. And the talk was really about that. I mean, it was not an investment management talk, but more, we've come a long way in Israel. The whole startup nation theme is exciting. I think it's one of the most exciting things going on in Israeli society. Never mind the Israeli economy, but it's not enough. High technology in Israel employs about 10% of the labor force. We've got to look at the other 90% and make sure that they are adequately engaged and employed, and be producing at a level that is commensurate with our legacy.
Right, okay. I mean, 10% of the workforce, but way more than that in terms of actual output, right? What specific areas need improvement to reach this vision?
Well, I think there's two main sectors that we should be focusing on. One is in education. I don't think our curriculum today, look, there are a lot of issues with the education system. I spoke specifically about curriculum. Our curriculum is not preparing students for a 21st century post-globalization world. So by and large, we're not coming out of the system equipped to contend with the world as it has evolved. And I think core to that is the English language, is that we need full fluency in the English language in order to contend. The English language is the first global lingua franca in the history of humanity. And our kids are not fully equipped. They're on average conversant in English. They are not fluent in English. And if you compare us to other countries, so we spent a little time on the Polish education system, which is really skyrocketing while ours is actually in decline. You see that other countries are putting that emphasis on the English language, and I think it's something we need.
Okay.
That's on the education side. Yeah, sorry, go ahead.
Sorry, I mean, I think we're going to have to cut it short because the sound is somewhat problematic. Tal Keinan, thank you very much for joining us from New York City.
Okay, thank you for having me.
Thank you very much for joining us. We move on now to Japan, where the afterlife preparation business booms. With a population that is expected to shrink by nearly 30 million people over the next 50 years, the market for funerals, graves, and anything related to the afterlife is very much alive. More on this report.
Funerals are normally organized by the families or friends of the deceased, but among the rapidly aging population of Japan, a new trend has people setting up their own funerals and grave sites, according to the Reuters report. Although companies can only subcontract services from temples, Aeon, one of the biggest chains in Japan, is cashing in, offering consultations on will writing and even coffin fittings. The once taboo subject is out in the open.
It used to be that talking about funerals or inheritance tax wasn't something proper or was bad luck. But as the population that is aging increases, there is more of a sentiment that it's something that needs to be thought about.
Indeed, the outlook in Japan is a shrinking population, which will be 30 million people smaller over the next half-century. The funeral market is booming. Between the year 2000 and 2013, the number of businesses providing this service multiplied by 4 from over 500 to 2,000. The industry does over $5 billion of business annually.
I figured at my age it might be a good idea to participate in one of these.
And with open land in Tokyo scarce, many are looking to different solutions for burials, such as this downtown building where thousands are interred.
Even if my remains do end up in here, knowing that I am being remembered along with everyone else actually has a sense of peace to it.
As Japan faces the future, many are finding reason to take part in this interesting and lucrative new story.
And we're joined now by Daniel Roth for a discussion about a report that we did not want you to miss in Media Watch. Daniel, so it's all about net neutrality today, right?
Yeah, net neutrality. Well, so we're going to focus on this for a moment because President Obama, made a huge announcement. He said, we want to go ahead and make the internet in the United States thought of as a utility. So like water or other, electricity, things that you still have to pay for. It's not free, but it's something that's expected to be provided for everyone.
It's a service that the government takes upon itself to ensure that everybody has access to.
Exactly. It's not free, but it's a service that everyone's expected to have. So he came out and he said, the internet is going to be a utility. It's not entertainment. This is something that everyone needs now. This was huge news. Now, the news came down from the Washington Post and The Verge that Tom Wheeler, the head of the FCC, a former lobbyist for major internet providing companies like Comcast and Time Warner, he said, I know he's the president, but I'm the head of the FCC, and I say it's not going to go. We're not going to, he says, with all due respect, the president's view is not nuanced enough for the future. It's worrisome for advocates of net neutrality that now there's going to be a big fight in Washington about this. Again, we saw a fight all the way down the road, and there's going to be a big fight. Now, what we're seeing is Google and other content providers on one side, and Comcast and other internet service providers on the other side. The service providers want to control how much content you get, how, and obviously the content providers want that to be free and thought of as a utility. It's going to be an interesting way forward.
It's actually interesting to just think about, the television for such a long time, for various generations, was the main objective, so to speak, in terms of education also, just like the internet. Yet the internet is seen as slightly different.
The internet, because I think it pulls more of you in. It's much more interactive. There's much more of a conversation going on.
It's an online encyclopedia, basically, also.
And also, it's people talk about it as holding the breadth of human knowledge. That's not the way we used to talk about TV. When people talked about TV once upon a time, we still talk about TV, but they're different types of media, and one of them is a way that humans connect, and the other is, by and large, an entertainment system.
Gotcha.
Beyond that, we have a new report that says that in the U.S., where 1.01% is going to own 90% of the wealth. Now, I bring this up because Jack Ma, who is the richest man in China, he's the entrepreneur who built Alibaba, told CNBC that he's very, very stressed out about all of the busy work that he has. He's not very happy at being so rich, and he wants to figure out how to get past being this rich.
Can someone tell him that, hey, there's some people here at i24 News that would be happy to take some of the burden?
This is our message to Mr. Ma. Well, we want him to know that we're here to take that burden off. We want him to know.
It sure is not being an English teacher, is it? You know?
Right. It's not the same thing. He says people look at him very differently. Of course. He's now going to start thinking about how he can get involved in philanthropy. I think probably this is the same impetus that put people like Bill Gates and others on the same kind of track. When you have that much money, it's hard to really connect with people because people have a hard time connecting with you.
There's therapy for this, actually. There are actually therapists who deal with this. We're going to have to end here. Thank you very much, Daniel Roth. That is a wrap for us at The Economy Magazine, your daily source for economic and financial reports at i24 News. I'm Binyamin Tjong-Alvares. Join us again tomorrow.